All right, what's up, sound check? How's everybody doing? What's up? Thanks everybody for joining me on Discord. This is brought to you by Jen and some people on TradingView that hit me up today wanting me to do a live stream. I think, Jen, you caught me at a good moment. Obviously, you know that I'm in a good mood because of what I was showing off at the beginning. This was the trade of the week on the NASDAQ. A little proud of myself because I put a lot of time into this right here, this article that I wrote, where I kind of framed it as a battle between Michael Burry and Peru Saxena. If what we were seeing in the market over the last few weeks, since basically June, basically, did we bottom out in July? Is this the end of the bear market? That's what everyone's trying to decide. Peru, ultra bullish. He thinks that we've surpassed it. Michael Burry took a little bit of a more hedged approach to it, saying that, well, you know, we're really in the average for bear market corrections. What that means is that this may have just been a leg up to go down some more. And I think there's a lot of bears that think that as well. But that doesn't matter to me. What matters to me was that right at the close of the market, at about August the 16th, let's go back to this time right here. Right before there was a spike. Spikes are my bread and butter. That's what I look for. It's a short-term period of volatility. You know what? Let's just clean it all up. I've taken enough of these. Let's see. Object tree. Give me a second right here. Let's just hide everything, make it nice and simple. So on the simplest level, basically what you had here on August the 16th at 2 o'clock, right before it closed on the 1 hour of the NASDAQ, a run up, which was interesting. The price action this day, which I was watching on Tuesday of this week, was kind of typical of what we've seen going through the last 2 weeks, where price comes down, swings back up. But the key was that it closed back inside this range right here. And I had to take it. Jenny asked me, he said, are you going to take this short? And I said, I felt like I had to. This is one of those where it fit my rules. No matter how nervous anyone could be, you had to take it. It fit all the criteria for taking a short trade, kind of dabbled around throughout the week. And then finally here on Friday, boom, down into target. So yes, good stuff. And plus, you had to take it because we have been on this run since June, basically for almost, well, not 2 months, about a month and a half now. And at some point, you're going to see some kind of a pullback. So I don't know if this is going to be the end of it, but man, it just feels good. Feels good. So yeah. Thanks for goading me, Jen. It did work. I want to do a live stream. Been doing it for a while. Thank you for the compliments on the beard as well. Do you guys like the beard? Do you guys like the beard? Does it make me more distinguished? It's actually not me whose idea it was to grow a big fire red beard. It's happens to be a lady, as a matter of fact. So we'll keep it as long as it's sexy. All right. Got some notes of things to talk about today, but as always, if you guys got something you want to talk about, post in the chat. I know we already had something on Nvidia, and I'm going to go ahead and start jumping into this. Just a second. Let's see. All right, let me check check if everything's here. I assume everyone can hear me, right? On YouTube's. Cool. Okay. All right. Well, today we're going to do some market recap, stock market as well as crypto, because I think a lot of people are a little nervous now because they got used to about 2 months of market coming back from that scary June. Yeah, the YouTubes. Oh, I'm definitely a boomer, man. I've been reminded of how boomer I am by a lot of different recent events. So let's take a look at stocks first, then we're going to look at crypto. And yeah, I got a lot of stuff to talk about, so we're going to try to get it done within an hour and 15. See how we can do it. All right. So overall, I would say that this is actually a recovery, and the reason for that is because on the S&P futures, we finally got above the daily cloud in Ichimoku. This recent 2-month bull trend that we've had has had sustained momentum. I think you got to assume that we did make a market bottom, that this correction we had, which was, how much was it now? How much was it total? I've been out of doing my regular things for quite a while. I even forget how to find my tools info line. From the top to the bottom, that was a 24% decline. If it had hit 30%, you would have considered it to be a crash, but this is still in between correction and crash. So not quite there yet. I know a lot of people think that inflation is a big deal, interest rates are a big deal, but you know what? The highest probability is things will be fine. And really, the opportunity to start buying stocks was this summer. I know a lot of people I talk to are wanting to get stocks much cheaper. I think people are trying to get the SPYs down into the mid 300s. I think that a lot of people are waiting to possibly get somewhere around like 3,000 level SPY. I don't really think you're going to get pre-pandemic prices. The bearish case is that everything that we see here, everything that has happened in the run up to the high that we made at the beginning of the year, the first of the year, was based upon the Fed just printing. Maybe, but by and large, if I just look at the weekly charts, NASDAQ especially came down, held support. ES got its head barely, but not really outside. It is just still a standard pullback. There's nothing particularly scary about it unless you happen to be watching it every day. So while I took this short because the reward risk is much more attractive on the downside, especially after having a 2-month bull trend. I don't think that this was necessarily the end of this bull trend. I think that we may see a pullback going into next week, but you got to assume that going through the rest of the year, it's going to be bullish. Hell, the more people doubt it, the more bullish I get. And that's why they've called this, in the financial media, the most hated rally, because people just don't want to buy it for some reason. They just don't want to believe it. And I'm kind of the way. I was wrong. I thought that we found a bottom in March. Basically, you had that Ukraine invasion in February, which gave you that spike down. I thought that this right here, failing to break below that Ukraine-Russian invasion, was going to be the bottom. But around May time, we started breaking lower. And yeah, I had a lot of calls that I went out publicly and talked about Amazon and Google. Those are my highest conviction trades for the year. And yeah, took a little bit of pain, but you know what? I was able to catch Amazon down in here, and now it's basically back to break even. Google, about the same thing. It has almost recovered from its lows back there, because these are companies that are not going to go away. Now, some more volatile, some more growth companies, they haven't come back. they haven't come back. I think Tesla has been a big thing people have been talking about this week. Yeah, it's just kind of entered into a consolidation pattern if you kind of look at it, but came down here. But patience, man, patience would have had you buying Tesla back around 650. That's that 50% retracement level that I do everything on. I think when it bottomed out here and came back up, I definitely caught it in here and did not take profit around 1200. That kind of pissed me off this year. Um, got greedy. I got greedy there, but this was also the patient play at 650. Now people are trying to, catch scraps, FOMOing in here. Don't do that. Don't do that. You're basically coming down now to, again, the halfway point of this leg down right here. So we're at a deciding point in Tesla, but definitely getting in around 650, waiting for that 50% retracement was the key. Key. All right. Crypto. One of the things that I posted about beginning this week, I think, was that finally Ethereum was getting on the bullish side of the cloud with momentum getting out as well. It's not a trade that I would take, and I noted that in my post. You can look it up here. Yeah, basically this is from Monday. One of the things that you have to note is the 50% retracement of the leg down was about 2,200. So if you buy it here, really your target, you need to start taking profit here. That's way too much risk. So this was not a very good trade. Now, the other thing that people have been watching is Bitcoin. And if you bring this up on an Ichimoku chart, it is a beautiful classic pattern. Bitcoin came up to the top of the cloud and held it right there. Right there on that same day, the NASDAQ topped out. The correlation continues. I mean, you can see on the right-hand side of my screen right here, stock market down, ES is down 1.3%, NASDAQ is down almost 2%, and crypto down even more, down 9%, Monero, Bitcoin down 8%, Ethereum down 8%. So we will see how this plays out over the weekend. But in the stock market, this is a pullback to a bearish trend. In Bitcoin, this was the pullback to the bearish trend. Excuse me. Let me start over. In stocks, this right here is a pullback to a bullish trend. In other words, you have a bull trend going up, and really, it's not that weak. It's not even dented the weakness of this bull trend. It's still actually the trigger line that I like to use in Ichimoku. It is called the Tinkinson, which is basically the 9-period median. You can see where it's holding it going up. That just tells you that this thing is still strong. Can't say it's weak until it gets back below, let's say, the green, the cadence in here, just a level of measurement. With Bitcoin, on the other hand, it never got itself bullish. I've had some very spirited debates about Coinbase, MicroStrategy. Might get into that if we have some time today. Don't forget to look at waste management and its new high. We'll do. Yeah, if you guys have questions, Palantir. Yeah, Palantir. I'm still hodling that in solidarity with people. So we'll talk about that in a second. So yeah, but the real MVP I still maintain in the crypto space, and I'm harping it, I'm shilling it, total disclosure, is Monero. Monero, which is a privacy-focused coin that no one really talks about that much because it's an old coin. It's been around since 2014. It's focused on anonymous transactions. Year to date, that means if we start from the 1st of January, this right here is Monero versus Bitcoin. That's XMR/BTC. It is outperforming Bitcoin. We can update this a little bit. It's outperforming Bitcoin by 30% year to date. And whenever bring up Monero to people, they say, well, Ethereum is up 1,000% in the last year, and Monero is up only, 200%. Well, yes, but you're expecting past performance to guarantee future results, which I'm also doing by asking people to look at Monero as well. But recent performance, it has maintained its store of value better. Just take that as a data point. Take that as a data point going forward. Need to make up your losses with coin leaves. Yeah, that's one of my big criticisms that I've had with people is I made a meme about this not too long ago. A lot of my crypto friends, they're wanting to diversify into stocks. And so what they do is they go out and they buy Coinbase or they buy MicroStrategy, which is basically a one-to-one correlated bet with cryptocurrency. It's not diversification. It's just investing in what they already know and love. I sigh audibly. Anyway, yeah, we're going to talk about some crypto news as well as we get into the live stream. But let's go ahead and hit some of the questions out of the way. Let's take a look at waste management, like Jen said. Waste management, new all-time high. Waste management has been my best trade of the year. This right here came from a buy down here back in February. Can I look this up? Can I search for these? Hold on, let's see. Let me pause for a moment to find filter by waste management. Is that March, February 27th? There we go. Would you buy garbage? Yes. Everyone was talking about how we're going to go into a recession, blah, 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 blah. People are still going to need their trash picked up. And so this buy back in at 138.64 has been good. Came back down and retested again, but again, this thing's paying dividends. Long-term hold actually took a little bit off. The initial trade was here where it was a 30-minute spike setup right there at that level. Again, remember how we were talking about at the beginning of the podcast, looking for a spike, one of these volatility events to happen. This one spiked down to a support, that weekly 50% level. Had to take it. Again, fit all the rules. You can't be scared. You got to take it. And was able to take off profit and leave the rest on, which it is. And so even when it comes down to here, I'm not worried about it. Key. And plus, I've held waste management for years and years. I had that same kind of thing. Why I originally started buying waste management, well, for one, they were my trash pickup company. They were a good dividend play, probably like 2015, 2016. But also, it was because someone once asked me when I said that I was a technical trader, so if the price of shit was going up, you would buy shit? I was like, well, as a matter of fact, I do own a lot of garbage. So that was that. Yes, let's look at Nvidia. You did ask that first. Sorry. All right. Nvidia. I also hold Nvidia, rather unfortunately. The key with Nvidia here is this. And now that I bring this up, I may actually change that. So Nvidia came down to its 50% level here. It actually held around the 220 level. Let's call it the 200 level here. That would have been a possible pullback, bing. But then it failed to break and retest the high. That's deadly. That is deadly for a trend. You see this a lot. If you go back and you look at these big trends where price comes up and then it pulls back, holds the support, and then goes to try back up to retest the high. If it fails, that's a problem. Okay. This chart is reminding me something of another dangerous thing that I've seen in the past. And I'm going to show you here in just a second. So I don't like what Nvidia is doing. In fact, right now, if you take that this right here, the 189 was support, it broke through that support and has now come back to retest it. This recent rally, this is a weekly chart. This recent rally has actually brought this back up to a resistance level. I don't like it. What this reminds me of is a cautionary tale that I use a lot, which is Zillow. Zillow did the same thing. I bought Zillow on, let's bring up the daily because I think I was able to, I bought Zillow when it came back to the 114 level here back in May of last year, 2021. And at that point, it kind of dabbled around. gave you a little bit of a reason for it to be bullish up in there. But then when it broke below these lows right here, I got out. Even though I like the company, I used Zillow. This was long before they announced that they were going to take that write down for all their automatic algorithmic home buying. So what ended up happening then was it kept on going down, and then you had that announcement. Boom. You had no opportunity to get out. Rather than I took the small loss here instead of taking the big loss here. And I don't know if you follow this or not, I do. It just continues to just bleed. And this is why you take losses. So again, Zillow came back down to a level where I liked it. I bought it. It broke that level, confirmed the break, and I got out. And I saved myself a world of hurt. And so now let's return back to Nvidia. I got to tell you, I mean, just to be honest, and like I said, I have some Nvidia stock. This is one of the reasons I do the live streams, because normally I just kind of leave it alone. But yeah, you got to recapture that level. You got to get into the 200s. Otherwise, no, you can't hold this. I mean, I know that Nvidia is the future, but that's the narrative that props it up. I mean, you can hold it and just say, well, I'm just going to hold it no matter what. But if you're trying to manage your position based on technicals, you need to get rid of Nvidia, or you need to watch it very closely. It's going to be painful to wait, but if it breaks 140, there's no bottom. What happens with these kind of, what's another one? Zoom, another Z. Yeah, another Zoom video. I mean, when you ignore these kinds of pullbacks here and hold on to something, hodl it, you end up what I call the valley of risk. This is where you basically don't have any kind of stop on it. There's no way of mitigating these losses. I mean, it's just going to continue on until you reach a point of so much pain that you're forced to sell it, and then it'll go back up incidentally. But basically, when you get something going down like this, anything you do is going to be wrong because you're way too emotional. So, yeah. All right. Can we look at Nvidia, please? It has a Bollinger Squeeze on the 5 minute, 5 month, 6 month, and a TTM squeeze. I think this is bullish. That indicator, well, I'm looking for long. Okay, yeah. Well, I mean, I'm looking for the long term. I mean, the long term here. If you're day trading it on the 5 minute, then sure. But yeah, we looked at Nvidia. Nvidia right now, just at the basic level, it's hit a resistance, and you can see it here. You can see where it takes this level at, let's see, 190. It respects it. So if you're trying to short it off here, then you're shorting it off a resistance. But if it comes up to here, then definitely that's going to the upside. So if you're going to day trade it, that's your major level. That is your major level. Okay. What will be a point of entry for Nvidia? A breakout. I would look for a breakout. And what it's doing right now is it's actually setting up. If you can come back in here, earnings is coming up in August. So if they get a good earnings and they pop up into 200, that's going to get this momentum out as well. And now you have a potential bull trend. But right now you got to wait and see. It's interesting that earnings is coming up to potentially put it to that point. So watch for that. All right. Palantir. Palantir is one that I hold with solidarity with my friends that for some reason like this stock, which I don't know what exactly they do. I just put money into it because everyone else did. And that's proved to be a very bad investment thesis. I really just wanted to have it to be interested in it. But man, I mean, again, this is one of those things where I talk about the valley of risk. I mean, how much lower can it go? 0. I mean, it's already broken below its IPO. It came back and recovered a little bit, and now we're back again below the IPO. I think you're just going to be waiting on this for a very long time, unfortunately. I mean, these things that kind of die. I mean, don't buy these things. Don't buy these things. Like, take a look at. Let's just look at Tilray, which a lot of you Zoomers may not remember Tilray because that was around 2018 in ancient times, BC, before COVID, where pot stocks in 2018 were the same rage that growth stocks and pandemic stocks and tech stocks were and meme stocks were in 2021. And you had this big run up where people were super bullish on pot in pot stocks in 2018, late 2018, and then it just slowly died. You come around to basically the $40 range after being up around 240. I mean, how much lower can this thing go? You say, how much lower can it go? Well, it can go down to 30. It can go down to 20s. It can go down to the teens. It can even go down to $2.50. So never ask the question, how much lower can it go? And unfortunately, Palantir is in that valley of risk. You don't know where it's going to stop. I'm not going to sit here and speculate, that, it's going to stop at this level, because the only level it'll stop at is zero. And just years and years and years of watching these, types. I mean, these charts all look the same. They're all the same. They run up, get everybody excited, and then you have a little bit of a fall off. People still have hope. They're FOMOing, they're hoping, and then they just hold, and come on here and ask questions like, well, when's this thing going to stop? As if I have a fortune, if I have a crystal ball. I mean, I'm just in the past. These things don't go well. They just don't. And there's a lot of stuff. I mean, BBVY was another thing this week, which I thought was very interesting to go and look at. Put on my retracements levels, and from the high that it made back in January of 2021 down to the low that it made in summer, this recent run up, man, see, the problem is I've seen so many of these hype stocks that I just completely ignore them. And I wasn't even looking on Tuesday of this week. It came up and pegged that 29.17 level. Man, what a good short that would have been. So follow these things, but okay, just do this. Stop buying what everyone's yelling about. Immediately jump into every one of these idiots is wrong. I'm going to make money off of them. It's so consistent. People come on the Discord, which, by the way, let me shill it. Join the Discord. It's free. I just want to talk to real traders. Go ahead. It should be in the links, either in the signatures or something like that. Come join me. Talk with us. We got some great mods that make me do podcasts and live streams when I haven't been doing it for a while. Come talk to us. But people come into my Discord. They don't really ask these questions because we'll answer them. But most of the people that are on there are people that are trading with a lot of experience and a lot of mindful strategies. But if I look in other chats and you look at really, really popular YouTubers and streamers and whatnot, they're all trading these hype stocks. These things all end the same way, badly. They just do. Hopefully, if you've been trading through 2021, you learn that, at least in one instance of it. But I've seen it again and again. It goes back to 2021 meme stocks. It goes back to pot stocks. There's been penny stocks on a day-to-day basis, crypto at various intervals. When people start yelling and screaming and teaching classes on how to make money on these things, you need to be thinking bearish. But I don't even take my own advice. I completely ignore it, much to my missing out, because, man, what an awesome hold of this level right here. A lot of people got burned. I don't know why they're buying Bed Bath & Beyond, but they got fleeced. They got fleeced by that Ryan Cohen. Yeah. All right. What else we got? You talked about shorting BBY. Well, why didn't you? Tuesday was a great day to short everything. You even asked me if I was shorting pattern day trader. What have I said about pattern day trader? That should never be an issue. You only use day trades to get out of emergencies. God. How many times I gotta say it? Damn it. Like, if something's going terribly, terribly against you, use your day trade. Get out of it. But I bet you were taking some profits, weren't you? Were you taking some profits for your day trade? Uh-huh. Uh-huh. You know, these, like, look, trading is hard enough as it is. Like, you gotta eliminate these big mistakes, and then you can still lose money. So, all right, Shopify, is the pain done? If you have to ask. All right. Look, if you bought a bunch of stuff in 2021 because people said that this was the future, et cetera, you're probably down a lot. I think you just have to take these as expensive lessons. I think you really just have to, okay, ask yourself this question. I think you should always ask yourself this question. Could you make a better return in something else? So let's just say that you have, you put $1,000 into Shopify. I'm not sure that's what you did. Let's say you put $1,000 into Shopify back in 2021 or 2020, somewhere in here. All right, so you bought 10 shares, okay, for $1,000 here. You got a little bit of run up. You didn't sell it. God forbid you bought it up here. All right, let's just say that you bought 10 shares at $100 a share, and now you're down to 34. So you got $340 left. Now, there's that psychological aspect that says, like, I want to hold on to these 10 shares. They got to come back. Come on. But you need to look at it from a capital perspective. You got $340 worth of capital tied up in Shopify. Doesn't matter what it was. That's what you have right now. Where is that $340 best put? Is it best put in Shopify? Is it best put in Bitcoin? Is it best put in a Treasury I bond, which is guaranteed 9% return in a year? I think you got to ask yourself that question. Like, do I expect a 9% return from my money in Shopify? Well, I imagine you expect more. I imagine you expect the kind of returns that you saw in 2021, which likely influenced your decision, double-digit percent returns. But the problem with chasing double-digit percent returns is that you end up with double-digit percent more losses. People chase that 60% on the way up from 2020, 2021, and now they're sitting down at a 80% loss. And that's just the risk asymmetry. So if you're asking yourself, is the pain done in this stock? That's not the right question. The question is my money best tied up in this stock? If you still think the company is going to go up, if you're still bullish on the company, then keep it in there. If you think the return is going to be better, but don't hold on to it just because you think it's worth more or less. And the worst thing you can do is promise yourself to get out of break even. I hate that. I hate it when people say that, because if you just take profit at break even on your winners and you let your losers go down 60, 70%, that's not a winning strategy. If you took on this kind of a loss, then you got to hold on for years and years and years and years. Do not sit there and like sell it, because you're going to regret, because it's going to go past it. It's going to go past your break even, because the market doesn't care about your break even. It just doesn't. Nobody does, except you, and you should. But that's not a reason to hold on to investment. These are easy things. Look, trading and investing is hard, but these are like the easy things that you can filter out these mistakes, and then you can be free to make, the real mistakes, which is, not putting your stop correctly, or forgetting to take off something as a profit. Then you can start kicking yourself for those things. But just eliminate the things that every book, every person talks about, and then you're free to still lose money, just in more unique ways. All right, natural gas. If you got questions, I think more people have streamed in. Ask them in the chat. Hi on TradingView. Hi to everybody. All right, natural gas. Natural gas is. Do I not have it up here? I should. All right, natural gas. Natural gas is interesting because it's not just for energy. All right, let's take a step back and talk about current events and politics for a second here. So Europe may be in trouble, and the world may be in trouble. Natural gas is not only what people use for energy, for heating their homes and electricity. It's also what they use for nitrogen-based fertilizers. And a lot of the big producers of natural gas and fertilizers have been Ukraine and Russia, which are now embargoed. I don't think either it's not going to be a big deal, or it's a big deal that people are just not talking about. But I don't think there's going to be enough food for the world coming up this fall. We're going to find out when crop harvests start happening here in a few months. We may not have enough. You may see the kind of 2013 Arab Spring type rebellions in some of these countries, because that was actually caused the Arab Spring. One of its root causes was the price of wheat going up so much. Let's see, where's wheat futures? Wheat futures were really, really high back in. Oh, this doesn't go back that far. Hold on, let me find it. There was a drought in Russia, which provided most of the wheat for the Middle East. And yeah, here it is. Basically, and there was 08, we're 2012. Yeah. And Arab Spring was in 2013, wasn't it? No, it was still during Obama. Yeah, it was during Obama time. But that was one of the reasons, was because bread prices went up so much. And what we're seeing now with natural gas being so high is that fertilizer is in short supply. Now, by the way, in the United States, we make enough. We also have enough agricultural capacity that our prices may go up a little bit, but we're not going to starve. But Africa, Middle East, which import the majority of their food, they're going to see some problems, very likely. And so natural gas is how a lot of these fertilizers are made. So it being so high means fertilizer is going to be so high, which means food is going to be really high. So there's a lot of reason for people to publish news about how the world's going to end or face a major calamity, but there always is. But that is one of the things to watch here. And the price on natural gas is not getting any lower. It keeps on knocking up against 9.5. But we shall see. We shall see. I think a lot of what is fueling this bullishness. Like, so what are wheat futures right now? This food right now. It's all priced in. That's pretty surprising. Hold on, that's August, so it's kind of low. I'm humming because it's not as high as I thought it would be. I don't know. I'm going to watch this. I'm going to add this to my watch list. Thank you for bringing that thing up about natural gas. That being said, technical perspective, it's at a high. Watch it and see what happens. Watch it and see what happens. Triple top, maybe. We'll see. Oil has broken this key level I was watching. I was wrong. I thought that oil was going to bounce around in this channel between about 96 and 120, but this is going down. So perhaps all of that rampant speculation that energy prices were going to go nuts, may not be the case. That's why I always kind of assume things will be fine. It's the highest probability is that things will be fine, but fear, doom and gloom get more attention. I could make YouTube videos about how the world's going to end, the market's going to crash, et cetera, and get a lot more hits. but I don't, because usually that's not the case. Usually, if you look back over the long span of history, even going back 100 years, you get a war in there somewhere, blah, blah, blah. But we all kind of want to continue this economy. So, that we're all going to have to go back to subsistence farming. Some people think that. I hope not. Maybe I'm being overall optimistic. I don't know. We'll see. All right. If you got any other things to look at, let me know. All right. So, this goes back to talking about psychology. A lot of people have been FOMOing into this Bitcoin and crypto rally recently. And what I've tried to tell people is that the reason I don't think that this bear trend is over, and the reason I don't think it's a buying opportunity now, is because people have not had the opportunity to become unemotional about crypto. Let's just take, for instance, you have a breakup in your life, significant other. It takes a long time to get over it, depending on how long you were with them and whatnot. People got really, really excited and in love and happy and ecstatic with crypto on this big run up. And then there was a lot of emotion. There's a lot of bad blood with Elon buying it and then selling all of it. There's a lot of people like encouraging people to buy it, like Michael Saylor, who I think needs to be liquidated. That's what I'm looking for, by the way. Still looking for Michael Saylor to get liquidated. I've actually got MicroStrategy up right here. This right here is actually one of my meta indicators is looking for chats, like cryptocurrency chats, how bullish they are. And really in the summertime in July, people started getting really bullish on MicroStrategy. They thought that this was a leveraged way to put Bitcoin into their IRAs and stock portfolios. Yes, I added that part in the leverage way. There's a lot of debt that MicroStrategy has taken out in STR, which I've noted in past events, like where they took out almost a $500 million loan, full $1 billion, another $0.4 billion. They're about close to $2.5 billion in debt to buy Bitcoin on margin. And he had a margin call. Saylor and MicroStrategy had a margin call when Bitcoin got below 22, which it is still below right now. He gets fully liquidated at $3,000 Bitcoin, at least as of prior to that margin call. I haven't heard an update on what it is yet, but it's almost poetic. This guy that at 65K Bitcoin was telling people to mortgage their houses, sell their businesses to buy Bitcoin. He has to fail. I hope he does. That would be justice, honestly. So we shall see. We shall see. We shall see. But a lot of people have been trying to buy MicroStrategy, and I've been very challenging of that thesis. We're about to see what ends up happening to those people. I wish I'd posted a screenshot the other day of me trying to short MicroStrategy stock, but actually my brokerage wouldn't let me. That was me just trying to take a little contrarian view to what people were talking about. Yeah. So, but the point is this, going back to Bitcoin and emotions, people have not, I believe, yet become dispassionate about Bitcoin, especially your hardcore maximalists. The price that you see is a reflection of the market's perception. That's what this recent run-up has been. You had a big, scary low in June, and then people that held on, well, now they have reason for optimism, and you see that. It's very slow optimism, very slow optimism, very slow optimism. When people have given up on Bitcoin, given up on cryptocurrency, that means the price will go down. When they're fearful, they no longer believe it has value. That's when you get a low. You get a real low when everyone is completely bearish on Bitcoin. When everyone is bearish, that is the low by definition. The fact that there's still so much optimism, the fact that there's still so much pride and ego invested in holding on to it and being right as opposed to all the naysayers, it almost is confirmation that we have lower to go. So, but I promise that I will pay attention to these meta-analysis. I mean, we even have local Bitcoin meetups where we have barbecues, and when Bitcoin gets up to a top, tons of people show up. We run out of food. But whenever Bitcoin goes into a cycle, we've been doing these since 2013. Whenever it goes into this cycle and it comes down to a low, there's a little group of uber nerds, of which I'm one of them, that show up and we have a good time talking with each other. It's happened multiple times in history. And we're going to have one coming up next week, actually, and we're going to see how many people are there. If we have our normal little dozen to 20 people, then maybe we have a bottom, because that's usually indicative of the number of people that are interested. When you start having people come in asking you when moon, it's not time to buy. It's not the time to buy. All right. Stone Pilot, the trade you posted on NASDAQ the other day that you shorted, I gave it a spike on a key level that made you take the trade. The key level that you were offering. So it was at a level, but it was the spike itself on the NASDAQ. And I talked about that at the beginning of the podcast here, or the live stream here. Let's just take off Ichimoku. All right. Independent of where it was. Now, one, spike at a level. One, spike. Two, at a level. Those are my rules. Yes, it was at a level. But there's another little thing that kind of played into it as well. You basically had this little recent run up from the beginning of August 9th, up until here. What this let me do is get a good reward down to the 50% retracement with a stop just above there. So most important was the spike itself. It had a ATR clearance. That means it cleared that last high right here by about 84% of an ATR. I usually want it to be above 80. And putting the stop above that high, given that that was a false breakout, look, it could have not worked, okay? But the fact is you had this big, nice, juicy run from August the 9th. If you take that trade right there, boom, that's a 3.42 risk reward. It's really about the risk reward more than it is being right. The fact that there was profit to be made that was very much in line with the risk I was taking, that's really key. I mean, this right here, I didn't know this was going to work. I mean, like any trade that I put on, I'm nervous, especially since I made such a big post about it. And I'll tell you something right here on this Wednesday Fed meeting, when it shot up, I was sitting here like, man, I hope this works. I hope this works because it's a textbook setup. Now I can go back and say, look at this. This is my setup. This is my bread and butter. So I'm really, aside from the money, I'm happy that this is years of study and work that came together in this right here. So I'm really happy that this worked out. Very much happy. And like all things, you can go back and you can look at the price action here on just a lower time frame basis. Let's go down to the 5 minute. A couple of things I noted. When this trade was going on, boom to boom, when I actually took it was on this one right here. And you'll notice where you take a 50% of this level right here, came up, held it, holding the 50% of this move right there. That was key to this working out, giving confirmation. My stop was still above the high for the day. But again, if you wanted to play really tight and take like a trade, like a breakout here, stop above these levels, could have done that. And then when you had the FOMC notes and it shot up right there, let me clear this up. That was another instance where I sat here and watched it because I hadn't quite got to my target yet. But if you look at it on, the perspective of, okay, here's the trend down. My target is here. My final target is here at 13,350. We're not quite there, so let me watch it. So you have this trend down right here. Boom, comes up to that 50%, tests it, holds it, tests it again, holds it, and then down again. So again, 50%, 50%, 50%. Throughout from here on the lower time frame, it held that 50% of the trend, telling you it was going to continue. And then from this move down, held it, and down you go to the lower one. So textbook. Yeah. Textbook. Doesn't come around that often, but when it does, gotta hit it. All right, what else is on my notes? I've talked about Monero. I've talked about Bitcoin and Ichimoku. All right, that's about all I got to say today. Actually, we're coming up on the hour, so if you got anything else to look at, post it in the chat. Let me go back through and look and see. With many stocks going down, what are the ones you think are worth investing now? Stocks at a 50% retracement. Well, stocks were going down till about this summer, and now they've started coming back. The time to buy stocks, I know this is going to be a little bit tongue-in-cheek, but was in the summer, was in June and July. You really needed to be looking at stuff then. Now that you've had this rally, you're kind of chasing it. That being said, what you should do is look at some stocks pulling back to 50% retracements on the daily or weekly. I am remiss that I have not been very diligent over the summer. I've been traveling a lot, and I actually did not catch many of them. That's why I've been not taking the live stream. I got a little lazy and also was enjoying the summer, but now I'm back into it. So I'll be looking for some more opportunities. There's always opportunities out there. But right now I don't have a particular stock. Well, okay, actually I do. Well, I'm talking my book here, but the one stock that I did recently this week was AbbVie. And my sans any 50% levels, AbbVie gave me a spike back on August 5th, which was not this week, but the week before. And so I was able to capture this long, oh, that's a short, and establish a position in AbbVie. And if I do recall correctly, yeah, this is actually at a 50% level. Okay, it is. There you go. So you might want to look at this because it's showing some good signs here at this basically 140 level. You know, there's the daily. And then, wait, am I the... Yeah, that's right. Where was this? Let's just go back to this day. So on this day, this is the one swing trade into long-term that I've taken in the last 2 weeks, stocks-wise. And that was because it did this spike on August the 5th at the open, which was at, this 50% level of this run up from October to April. And so right now it's still kind of hanging out at this level, but I've already taken a trade, taken some profit off, have a smaller, more manageable position in it. But it's still there. It's actually still there. I think AbbVie is a pretty popular stock as well. So yeah, this will be the only one the last 2 weeks that I've really taken. And it has already shown me some promise, basically. And of course, my stop on the trailing, the remainder position I have is going to be below these lows. So I don't want it to get down to 137, 136. But as long as it holds up in here, I've got profit on the books and able to hold on to it to go more. So this would be the stock, actually, if I had to pick one. Gold and silver. Josh wants to look at gold and silver. Well, you know that I'm still short silver. I'm still short silver from a few weeks ago. See, where did I put that? So silver in June started breaking below this 50% retracement level at about 1933 on SLV was the instrument that I was looking at. And it came down, showed me some pretty good profit there in the beginning, and has come back up to retest this low right here. And now down it goes. I think it's going for a leg lower. I do. And that is me talking my position, but that is what my thesis was. My thesis was, again, this is like I was talking about Nvidia at the beginning of the live stream. and talking about Zoom at the beginning of the live stream, you had this clear support, 50% retracement level, price comes down, holds it, kind of dabbles around, breaks it, comes back to retest it, and now it's going for another leg down. I'm in this short, and that's what I see. So there's nothing. Sorry, I know you're bullish on it, but I know you like gold and silver, but that's what I see. That's what I see, and that's how I'm positioned. Gold, gold on the other hand is a little more resilient. If you're looking at this one as just a general technical analysis perspective, you've got a long-term double top on the weekly. Okay, and so general theory about double tops is that what it should do is come back down to the neckline, which is very clearly here. This is a classic double top, actually, if it plays out. And it's already coming down to the neckline. The neckline is basically where you have a run up, you make a one top, you come down to establish a neckline, and then you come up for a second top. And then what happens is you are expected to break that neckline, and then this is just according to double top theory, your profit target is basically the break of the neckline from the neckline to the high. And so where you would look to take profit on a break would be around the 1273 on gold if it breaks. But as you notice right here, it's almost like a self-fulfilling prophecy that we came down to the 1681 right here, which was these lows and the neckline for the double top. And that is where it does seem to be holding here. So really your key level is the 1680 right here, which is matching up with the 50% retracement. So basically your 1600 range in here, that is the danger zone that needs to hold as support. And so as long as it holds there, then gold should be okay. All right. But if it breaks 1600, lights out. Lights out. But yeah, silver is already showing its bearishness. So, all right. What about BlackRock setting cash fund of $50 billion ready to scoop up cheap real estate for the coming housing crash? They seem to be pretty set for this is Mr. Invertigo on TradingView. Thank you for this. They seem to be pretty set up for good investment. That being said, they just offered a private BTC spot investment to their private members. They seem to have changed their crypto tune just recently. Then you have the world's banks starting to make their own central bank digital coins. Thoughts? Okay, a couple of thoughts there. Okay, number one, BlackRock, you need to understand what they are. BlackRock does have a lot of individual investors. There are a lot of fat cats with cigars and top hats, but they're also the largest manager of pension funds. What do pensions need? They have lots of old people that require monthly payments for their lives, because they're not working. They need fixed income. And that monthly payments that you're going to get, that cash flow, the best place to get it, hands down, is real estate, because people are paying their monthly rentals. That's why BlackRock has become such a big speculator in the real estate industry, is because they have so many pensions. And so what to invest in? Well, they need to invest in an asset that generates cash flow that holds its value. Real estate, because there's no money to be made in bonds anymore with interest rates being so low. So, it's not the narrative that, BlackRock has just bought up a bunch of property to make people really rich at the expense of creating a permanent renter class. The second one might happen. We may end up with a permanent renter class, but it's not just to make individual people rich. It's to pay off the pensions of all these boomers that are getting ready to retire. They have to make this kind of a move. It's totally understandable. So it's not that they're doing it for a real estate crash. I think there's a couple of, you didn't say it in this one, but I kind of know where you're trying to go, because I've read this in other crypto chats this week. And I'm going to get to that. But first, on the real estate, it's not that they're preparing for a housing crash. I think you've taken one step further than you probably needed to, because they don't know the future either. You got to remember, like, these are human beings that work at these companies. They're not smart. They may have PhDs. They may be a little smarter than me or you or anybody, but um, I think I'm pretty dumb and clueless. But then again, everyone else is. People make mistakes all the time. So they don't know that a crash is coming. They're allocating this money to real estate because it's an asset class that fits their objectives. Okay. So don't assume that because they're tucking away money, it's because reason X. When the clear Occam's razor simplest explanation is they're doing it because it's an asset class that fits their goals, which is to meet the needs of these pension funds that are, they're obligated to help. So on to the crypto thing. JP Morgan did this recently. I know someone that's an account manager at JP Morgan, and I brought this up to him. I said, hey, JP Morgan is, letting clients buy crypto. What's up with that? They said, well, we don't do crypto. JP Morgan doesn't do crypto, but their clients are asking about it. Now, what is the job of JP Morgan? What is the job of BlackRock when it comes to a trade desk? It's to be a broker for their clients. If someone says, I want to put $1 million, I'm a high net worth individual. I've got, $10 million in assets. I want to put $1 million into this ticker with 5 letters that I heard is making some, body enhancement pill, this pharmaceutical company. And they're like, you sure? They're like, yes, I want to put my money into it. And then JP Morgan's going to say, okay, it's your money. There you go. And then charge you hundreds of dollars in commissions. They don't care. It's not that they're buying it for themselves. They're buying it because their customers want to buy it, and they're providing that as a service. So you really have to take this news first at face value. You have to take it as like they're doing what they say they are. They are creating Bitcoin spot investments for their clients. It's not that BlackRock is planning to go out and buy a bunch of crypto. That is confirmation bias. That's what I see constantly. And you go back and think about the things that you read in the 2020-21 run up. Elon buying it, whatever MicroStrategy was doing, all the talk of institutional involvement. These news articles come out from people that have Bitcoin, want to buy Bitcoin. They're just confirmation bias for what you already think is going to happen, which is that Bitcoin is going to become, more than it already is. It may. It also may not. You can't take these news events and automatically assume that, okay, that $21,000 Bitcoin I have that's going down, BlackRock bought it, so I'm going to hold to it. I don't trade on any news. I didn't know at the beginning of this week that NASDAQ was going to come down. I just saw an opportunity. Now people are talking about how it's inflation fears. And I think last night someone was talking about how the news was that last night, at about 2 a.m., this move down in Bitcoin was caused by FTX doing something. I don't know what it was, but if we just take a look at this Bitcoin and we put on the bottom the NASDAQ at the 5-minute, where's 2 a.m.? Where's 2 a.m.? Where's 2 a.m.? Where's 2 a.m.? 2 a.m. was right here. Yeah, you're already in a sustained trend. Let me take these off. You got to be really careful taking these news that you read, and I don't think you can really trade on it. I'm trying to make these match up. Hold on. I mean, you're already in a sustained bear trend. Yeah, probably that news from FTX caused it to do that little liquidation spike here. But what has been going on in the days prior? I mean, yeah, that news event is something for them to report on. That did cause some kind of a high volatility event, but the prevailing trend is what matters. And so you can have all this news about. I've been very critical of news because I look at a chart, which to me tells me all I need to know about what an instrument is doing. I look at a chart and then I see people, come in at different points and they say like, well, this did this, therefore bullish. This did this, therefore bullish. And I'm like, it's going down, guys. What are we doing here? I mean, you're just looking for things to confirm your bullish bias, ignoring the fact that it's going down. So be very, very careful. And then for the final note about central bank digital coins, that's definitely not bullish for crypto. Governments really hate competition. I think that I mean, the dollar is already pretty digital, actually, if you think about it. I mean, when you swipe your little piece of plastic and you exchange that for food, you're doing a digital transaction. The Fed talked about wanting to do digital stimulus checks, but they just weren't ready in 2020. But they're coming. They're coming. A central bank digital currency, sure, but it's going to be controlled by the central bank. And they're surely not going to really enjoy there being competition. They're not going to, it's not going to be Bitcoin. It's not. Why would they make it Bitcoin when they have no control over it? And again, I'm sorry to bust people's bubble about Bitcoin not being the world reserve currency, but it doesn't need to be. It's still a good store of value. It's still immutable. It still prevents double spend. It still does everything. But stop I really take issue with people talking about how it's going to be worth $1 million a coin because reasons. That is obscene. That creates these kind of cycles when people have those kind of expectations that they're going to become incredibly wealthy because of some price and some reason. You don't need it. But then again, I'm just an old Bitcoiner. I really want Bitcoin to go back to, I want to make Bitcoin great again. I want it to go back to this original intention, which was for drug dealers to buy pizzas back in 2010. That's what I want to go back to. But I don't think people listen to me. So, all right. What else we got? Shih Tzu, please. Shiba Inu? Shiba Inu? Really? Do I gotta look at Shiba Inu? I think you're trolling me, Bascon. I've been talking about Shiba Inu for a long time. Shiba Inu. Where's my Shiba trade that I had? Hold on. Let me bring that up. Yeah. Where's my first Shiba? Yeah. Where I talk about it breaking that level. Again, this goes back to what I've talked about with, when something breaks a key level, comes back and retests it, you got to pay attention to it. Take it back to where Shiba was at point. Oh, screw it. I hate those zeros. When it was here. And then there you go. Oh, look at that. Has it really been going up recently since coming down to my target? Hold on. So I got rid of this. It got down to my first target there, and then it kept on going. Where's the secondary thing? Yeah. Are we talking about Shiba Inu? Yeah. Basically, 0.0002122 basically was the support, and it's coming off of that, I suppose. But yeah, this was an addition to there. And then finally it came down here. Wait. Shiba FTX. All right, let's just bring that up. No. There we go. Okay. Yeah. All right. Looks like you had a little run up. Yeah, the dog's dead. Oh, it's a rip off of Shiba Inu. Are we really putting our money in dog coins? Did I not show you guys that you could be putting your money into like something like Waste Management, garbage company? You could be buying the stock that pays what's the dividend on this? Yahoo Finance. I'm really losing my patience with people that look. It's your money. You can lose it if you want to, but like putting it into dog coins when, for instance, Coca-Cola stock gives you a dividend yield of 2.71%. I know it's not much, but at least you're not losing 60%. And Coca-Cola has been one of the best performing stocks of the year. Tired of it. Tired of people trying to YOLO, $20 into $1 million. I got nothing for you. Shih Tzu dog's the most popular dog. Okay, so that's why we're buying it. What's the symbol? So I can watch it and tell people when to sell. I'll do that. I'll tell you like I did, like I told people on, this one right here where you had to put it down. Like when it broke this level at 0.5734, okay, basically November the 4th, 2021, tried to tell people, you can chart these things. You just can't buy into this. It's going to go to whatever people say it is. Stop listening to other people. Listen to me. I'm kidding, but I'm not. SHIH USD. Okay. No, that's SI. Is it even traded on something? Shit. Okay, I'm big. Is this it? SHIT? No, that's shitcoin USD. SHIS. If it's not coming up on TradingView, man, I ain't got nothing for it. Shih Tzu wrapped ether. Okay. Okay. If we're talking about dog coins, it's time to wrap things up. All right. Well, thank you guys for joining me. I appreciate it. Keep bugging me, and you might get one next week. So thanks and trade wisely.